Oi, oi, oi. God damn. Well, we're finally out of the sideways period. Hallelujah. Thank God. So first of all, I mean, what I want to do in this video is like lay out the possibilities that I see going forward from this week. I think it's pretty clear cut. I'm gonna be straight with you guys. I see like two possibilities, but they're pretty much the same thing. I'm gonna be going over both of them. But first of all, I'll try to keep it sort of brief. I need to like leave in like an hour, so hopefully this is okay. So, I'd like to draw your attention to, I've shown you guys this visual a few times, but, right, I had 30, actually, the funny thing is, I've said 31 days for like the past week or two now, but I think it's actually 32. Like if I go down to here, yeah, 32 bars instead of 31. So, it's another reason why you shouldn't listen to me. I am pretty retarded, but we'll change that to 32. And then we'll do the same thing, right? We'll measure from here, which is the first day after our pretty sizable move down to here. And that would bring us to 33 bars. So, you know, pretty much the same thing. I don't really feel the need to change this. Let's just say 33 for the hell of it. But, yeah, right? So, you know, this was like the move I was waiting for. And now I'm going to show you guys like where I think we're headed next for the rest, at least for the rest of the week. So, obviously, if you guys have been around since since May, which I'm inclined to believe the bulk of you have been. If you're new, welcome. But obviously, GME moves cyclically. And what I do with Elliott waves is, instead of predicting like the human nature side of it, I use Fibonacci and wave theory to try and predict like the algorithms that are running GameStop. Human nature, I guess, like pretty much the same thing. So for everyone that says waves aren't applicable because it's algorithmically driven instead of human nature, I digress for that reason. But, yeah, let's jump into it. So, I think today's move is equivalent to this move. This was what, May 11th? And this marked like the first day of our, what was it? Let's say like a 3-week cycle, right? This marked day 1, which was May 11th. And, right, I want you to focus on this candle right here where the arrow's pointing to, right? We look at this. Open 136, high of 150, closed 146-ish. So, and then today, interesting candle. That's pretty crazy. Lots of action, but right, similar idea. After so many days of like sideways nothing, finally we made a move to the upside. And so, just for the sake of simplicity, I expect the rest of the week to kind of mimic these days, right? So we had 1, 2, 3, 4, 5, right? So that would mean tomorrow, you know, assuming it replicates entirely, not even looking at it from a waves perspective, just from candle structures. I'd assume tomorrow's candle to look kind of like the thread one, Wednesday green, big green, Thursday like doji type of action, and Friday another green day. And then we'll have some sort of consolidation action like this, kind of like what we had here, same idea. And then that's where it gets really fun after that happens. But now let's dive into the Fib analysis. And here's why I think there are a few different possibilities, and I'd like to lay out all of them. So first, let's clear all the fibs, as you can see me do this from the start. So let's open hourly first, just so we can make sure that I'm measuring from the very low point. Okay, so right here, Wednesday at open, we hit the lowest of our wave 2, right? 1, 2, 3, 4, 5 up to make a wave 1. A, B, C down to make a 2. Actually, I've said W, X, Y, A, B, C. I mean, just because of how I guess you could see, alright, fuck it, I'm not even going to explain it, it doesn't matter. But basically, you come to the same conclusion either way. Low is in right here, and let's dive into the fib structure a little bit deeper and see what conclusions we can draw. So, I expected more of like a steeper drop, I'm not going to lie, just because if we measure the low of 1 to the high of 1, we only came down at 38.2, which, okay, actually, here's where it gets sort of interesting, right? So, in wave theory, if your wave 2 isn't a super steep retrace, we can assume the wave 4 will be steeper. And so, in this instance, our wave 2 only came down to 38.2, which would potentially signify that our wave 4 is likely going to be a deeper correction. And, you know, showing the bull case first, assuming that today was a wave 3 up and then 4 down, this would make sense because our wave 2 is really shallow. And so taking the super basic approach first, let's just get our measurements up. So before I draw them, what's the most common wave 3 fib relationship? If you said 1.618 to 1 of wave 1, you're right on the money. And so let's try and illustrate that here, right? Low of wave 1, high of 1, low of 2, and bam, right there, right? And if we pull up like a 1 minute, like a degenerate, right? No candles closed above it. So that's has me pretty confident that today's move up was a 3 and the move down was a 4. And so in most scenarios, right, you'll have your 3 up to 1618 and then a 4 will bounce at the either the 100% level from the same fibs that you drew earlier, or what you'll get is a 0.382 retrace of the entire move, or from, what's it called, from the wave 2. Right, so this is what so normally we'd expect to bounce somewhere in this area here. Obviously we didn't get that, so another way to look at it is we'll draw it from the very beginning. Again, remember, we're looking for a steeper retrace because this wave 2 retrace was really shallow. So there's your 50% there. You could argue we're bouncing off it in after hours, but this is important, right? If the structure is bullish in that this whole move was a wave 3 and a 4 down, where we can expect one more leg up before, correcting down, we can't break below the wave 1 high at 175.7, right? So I guess that's an important number. Remember that one. And so now let's forecast a bit. So yeah, all that matters is if we're expecting more upside into tomorrow, we can't break below this level. And if we do, then the correct way to look at this interpretation would be we had, I don't even know how I'd count it. I'd probably need to pull up like a 5 minute, I don't know, something like 1, 2, 3, 4, 5. This would make a wave 1. And then we'd expect the entire move, we'd expect to come down to, like 175-ish. And this would likely be, your last chance to grab shares under 180. So, we'll have to wait and see what tomorrow brings. 175.7 will be your critical level. Break below that would likely signal bounce to one of these levels. Yeah, I could go a little bit deeper, but it would be completely pointless if we open below where we're at now. So I'm just going to leave that alone. Just remember that level, 175.7. So I think that actually, right, now let's talk targets, though, in the event that this does mark the low. Just based off the last cycle's movements, I'm going to go out on a limb and say that we're likely going to be kind of red into tomorrow, just because we didn't bounce at the 0.382 that I outlined earlier. Again, because we did have a shallow wave 2 retrace, the wave 4 as a steeper retrace, it makes sense. But at the same time, this is a critical level here. So assuming that we bottomed, right at the closing bell, which is possible, that would put upside final 5 targets at between 191 and 195. And so that move up in itself would just be a larger wave 1, right? You'd have 1, 2, 3, 4, 5 into a wave 1, ABC into 2, and from there, that's where we have an even bigger upswing. Just for reference, let's go back to May, right? So you had a wave 1 up, 2 down, 3, 4, and then 5. So assuming it replicates the same style like here, which, that just makes the most sense to me, because GME has, it repeats itself. And so I just like to base my analysis off of historical trends. Let's just look here just for the hell of it. Low to high, under 50%, borderline 0.618, and then from there, if we're trying to see how high the next move went, we'd expect 1.618 to 1 of that. So here to here so here to here, looking for 1.618. Even broke above it, but closed below it. I mean, if I pull up the 2.618, see, I don't know. If I pull up an hourly, I could definitely analyze it better. This is just for for visualization purposes. But I assume the next 5 days are going to look like this structure right here. That's my guess. I think that's about it, honestly. I mean, I can pull up indicators and we can try and draw conclusions from that, but you guys know me. I don't really like using indicators that much. If we pull up a 4-hour, I mean, everything I see makes sense. You can see on the 4-hour we were squeezing, and the squeezing firing off, going from the red to green, was this move here. So not that I endorse playing options, but if you caught this, congrats. That's a hell of a move. Pull up a daily, just because I know everyone likes our daily MACD. Borderline crossed over, in our TTM squeeze, it's finally throwing a yellow signal, which is That's what you like to see from a bullish point of view. Your red is your bearish momentum, yellow to light blue, it's turning into bullishness, which supports the idea that the cycle is ramping up again. Broad targets remain the same. In this degree wave 3, I'm looking for ideally 305 on the lower end, but if it replicates this move here, I'd expect 392, and that's just a wave 3 within this whole leg here. 1, 2, 3, 4, 5 to even higher after that. But again, we have to just map that out when it happens. Until now, it's like we can forecast it, but it only does so much, So I think I about covered it. One more quick look before I sign off. Pull up a 15-minute again. Yeah. TLDR 175.7 to make or break below that signals not too much more downside, but expect it to be kind of red tomorrow, and then the day after, that's when I'd expect to be impulsive again. I love when GameStop's impulsive, though, because it's, obviously, I'm no god, but it's a lot easier to predict when it's impulsive versus when it's corrective, because that's kind of just the nature of waves. Reading impulsives is way easier than corrections, but, yeah, sick. Thanks for tuning in. Got a hell of a week ahead of us. Sick. All right. Peace.